right, so this video is going to be on Fibonacci with the RSI. So Fibonacci and the RSI, I haven't really used Fibonacci in a while. That was more something I would use with Forex. However, I do have the strategies still familiar with the strategies I would use when I used to use Fibonacci. Just to get familiar with the Fibonacci, is based on the golden ratio. If you just look up the Fibonacci sequence, it's basically based on a series of number where every number adds to the next, I believe, to a series of something exactly. But the reason why it's like this important sequence is because technically it the Fibonacci can be found in like all beautiful things in nature, the galaxy, universe. It's like the special relationship between numbers. Um, and people created the Fibonacci indicator to basically um, use that level of importance to extend it to the stock market, thinking that the same relationship you see with numbers will relate to translate into the stock market. So you have like the levels of Fibonacci. I do have an extra one just because it was something that I would use typically for most type, because I think from an institution level, the 0.5 is kind of somewhere I got from that. However, the levels are, I guess, starting from zero will be, you'll have your levels as the 61.8, 786, 61.8, 236, oh, I'm sorry, I got this in reverse. But so the levels start here. So start from zero, you have the 236 level, 382 level, 618 level, 786. And then, like I said, I got the extra one, which is this 0.5. Typically, I just have it in there just in case if there's a certain another level that I want to participate in at that level. And so basically, the way it works is that if you're looking for a pullback, you will set, let's say, your zero level, so your ground level, at a certain high point. Looking for a certain retracement. Usually, I like to use the body, the opening of the wick, the candle, the body of it. Some people like to have it at the top of the wick. Just preference. Just for however you feel like it. I like to use the body because I like to use the body of the. But whatever you use, you want to make sure that stays in. You want to have that. Everything the same. So if you're using a body to wick, then use a body to wick for your retracement. Use a body wick for the extension target, just to keep everything in the same line. So in this case, typically you would like to use have the level at the zero level, at the body of the candle, and then the opening of the candle, and then that's also the close. So have it at the close of the body of the candle, not just the the close of the candle, not just have it at the body, but you want to make sure you're using the close of it. So if it's just the green is on the top, but that's the buy. But if this was a close candle, you will have the level at the close of the candle. If this was a sell, so you have it at the bottom of the candle. So the bottom of the body of the candle would be where you will have it. This is your zero level at if this was for a sell, and I'm looking for a target. So now that we got that over it, you see we'll put this here. Typically, you want to have two type of confirmations, though, right? So if you want to get in here, typically, for example, if you was to get confirmation from the RSI here, right here, this is actually a pretty good example. So if you was to look him to get in here using your confirmation that you think is overbought on RSI and it's overbought, it's extended out to the bands. So the second point would be that you will need to make sure that you're targeted is associated with the market structure that you are referencing, right? Because you want to figure out the retracement. Like typically, you want this one level, which is like your 100. You want this to be at the low. So you're using the high and low points, and you will need the low to be referenced to whatever your time frame you're looking at, right? So I'm looking at the daily candle, and I don't need a low point here. Price is not going to come here. You need to be more realistic because this is from looking from the daily candle from December 7th, and the low May 420 is it's not going to retrace back there. That's not realistic. So typically, what you want to do is have the low level at the next level of support or second level of support, however you feel comfortable with. So in this case, I would probably have um I would actually probably have it here realistically. But if I felt like it was more gonna come here, then I'll probably bring the level to like right here. And what you do is you look for so you basically are comparing, seeing what's the price action at this point. So for me, a more safer target would be this point three level, 2, 3 level, right? So right here it's at about 113.52. So that would be like where you would set your target if you were shorting at this point. So think of it too, like if you was to look for your strike price and you say, okay, I'm gonna get a put, then you could probably use this as your level for your put. So your strike price would be 113, and this could be using this level. If you think it's going to drop even further, then you could probably use the next level up. And this would be your 109.15. And this could be your second idea. If you think price is going to dramatically drop here, realistically, I don't think ARC is going to come back down. But this is your preference. You use your confluences of how you see market structure, the RSI, and the bands, and this will be how you conclude what you think the momentum is of where your sellers will go anticipate towards. So do you think there will be a lot more? Do you think they will sell? Will the sellers come in with enough momentum and volume to push price all the way below to the 382 level? Um, if you believe that's possible, then that would be where you would like buy your put and set your strike price here. Or if you're shorting the stock, then you saying this would be your TP, your target price, right? You will say, okay, I'm going to enter around here, and I'm gonna put my target price limit. So your limit word would be here if you're looking at the 236 level or the 38 level. So that's typically how you would typically use the Fibonacci when you're looking for retracement. If you're looking for to short or put in this way, if you're looking for it this way, another way you can use the Fibonacci in this level uh, is if you're trying to look for retracement to find where you think price will pull back to, and you could get in to continue. You're bullish on the stock. So this now what I'm talking about is for a bull trade. So previously I was talking about if you're shorting, if you're buying a put, but right now if you're long, if your bias is that ARK is bullish and you see it's on a run and you're looking for an entry point, then if you look at you bring the chart up, you look at it and see, okay, it's getting to an overbought area. It's been running hot for a while. Maybe it might need to find some time to breathe, find some time to correct itself. And so then you will look and say, okay, using the RSI or however you determine you're overbought, and then finding where you think it's going to start going back for a rally. Maybe you might have the RSI here and say, okay, it's overbought here. And then maybe you might say when it gets to right here, it might pull back to around this support level on RSI and then go back again for a rally. So, it just all depends. And how you would do that. So basically you would say, so from this level, from here to here, it's not that far of a level drop, right? This looks more like it could be more in line with the 2-3. If I was to look right here, then I'll probably say the 3-8 would be my second area. If I felt like the RSI would drop dramatically to that point. So then what I would look at is say, I think it's gonna drop to like the 2-3, and then this would be where I would say I'm gonna get in for a pullback. So you'll set your if you trade in stocks, you'll basically find your entry point around these areas, maybe set it here, and maybe you might have your stop loss like, or maybe no, maybe you don't have your stop loss. Maybe if you're buying shares and you just get in here at this level, then you know right here you're gonna buy some more, or maybe you might skip it and say if it comes here, then I'm gonna buy some more, my average down, and then depending on how you're doing it, what trade you're trying to make. But if you maybe say, okay, but if you use this stop loss, then maybe you might have your entry point here, and then maybe you might have your stop loss here, depending on what the risk reward ratio is. So depending on this, these are new highs, of course. So, but let's say you make your target the overextension level. So this would be like in a sense like your 1.23 in this case. And what you would do is you'll basically use this to figure out what's your risk reward ratio. So like let's say you target here, and then let's say you make your risk. So this is your entry here. So let's say you make your entry at this level, and then you make your stop loss here. So you have a risk reward ratio of 3 to 5, which is pretty good. Anything 3 and above is a pretty good risk to reward ratio. But of course, you kind of want to be somebody who trades a lot, a much higher risk reward ratio. I mean, the greats, you want to get an edge. So to me, I like to find risk reward ratios about like 5 and above, minimum at least. But yeah, you could have this stop loss here, and then maybe you say if you want to make it a little bit more, you say okay, I'm willing to take a little bit more risk. Then you see how much risk ratio is here. So it's 1.72, and you drop it down to the 0.5 level. And then here you just basically saying, okay, I'm doing 101 at this point. Oh, sorry, silence. So continue moving forward though, like so if you're bullish on the stock and you're looking for a pullback, like I said, the 2-3 level would be where you look for your pullback to come back and get in. If you're very more conservative and you think price is going to drop even more, then you'll probably make it even 382 level or the seven or your 618 level, and maybe you find the entries through there. So but just be beware. Like I mean, typically you don't see a retracement that bad, or if it is that bad, there's some major news or some horrible catalyst for why it dropped so far back. Where I'll kind of be like, I don't know if you want to get in a trade, something that pulls back that far. Typically, you would like to see a pullback like these, like between the 2-3 and the 382 level. Like that's where you look for a pullback, maybe to the 5. Um, if there's any major news, then maybe that'll be something. But like maybe it's just a major correction in the entire market, then that's a different story, of course. But yep. So, just if you're wondering, this is over here. If you want to ever check like the risk reward ratio for a long position, or a short position. So like how we were saying earlier, let's say you want to get in at the top here. And you make a stop loss, maybe like right here. And maybe you say you're gonna short to all the way to um, say here, massive reward ratio, risk reward ratio, right? But that's be realistic. More realistic, we're gonna be like you're gonna make your entry point here. In this case, maybe I would probably make it the top of the wick for sure in it. But if not, keep it here. Maybe say it's gonna probably come right there here. So your risk reward ratio would be like a 2.21. If you made it tighter, like right above the wick, you make it a target. There you get a better, more realistic wick. This would be a more realistic, I think, position to take. Actually maybe like here. So risk reward ratio is at least a 3.02. And what you do is you have the zero level at the height of the body, so that basically the height is, and then you have your target um, again at that 23 level, and the stop loss will be like right above the wick, and then that's how you determine the risk reward ratio in this case. Remember, you're using not just the Fibonacci. The Fibonacci, in my opinion, has always just been looking for like maybe an entry exit point, and I like to use the place that has a lot more price action because when I see a lot more price action, I feel like there's a lot of orders there, and there's going to probably be more orders in the future. So when the price gets to that level or this price level, I guess if I'm gonna put this here, then it's gonna just stall around there, you know. So speaking of like, if I'm looking for a pullback, then I think price is gonna pull back to around this level because it's kind of magnetized to it. You know, you see a lot of price action around this. Is about 1, 2, 3 candles around here. A lot more price action. So that would be something that I would like look at as the level for where I want to get in for a pullback, and then coincides with 23 levels. So it makes people. So people just like the levels. They like their however they see the market, whatever their market structure is. They like to coincide it with the Fibonacci levels, and that gives them just a little bit more confidence in like this level being a good level to get in at. And then you combine it with the RSI, and then you have like all your confirmations, which all tell you you're good to go. Um, so that's typically how you use the Fibonacci with the RSI. Um, Another way you do it too is if you like maybe you use the RSI and you say I like to look at like um, long candles where it shows some algorithmic trading because typically algorithmic trading just push price up so fast that sometimes a lot of orders are missed. So I always say that if that's the case, then if it's fast, it won't last. And so anything that drops really fast or just goes up really fast, always if you ever notice that, like just look. If it's fast, it don't last. So like it's not really it's doing this on the sell side a lot. BC price bounces right back up and then raises up. Because you need healthy price action. Oh here, well these candles they're not really doing on the buy side. Interesting. Oh, here goes one. It's a pretty big candle, but looks like it's from a previous one. Oh, it just comes out the buy here. Yeah. Well, I guess you could count this one here. Bought so and bought right back into the body. But typically that's how you use the Fibonacci with the RSI. Um, you don't just a note you don't have to have the 0.5. Like that's just something I just came up with before from like another instructor with Forex. So don't keep that in there. You can just use the point. You can just use the levels as they come, which is the 0.236, 0.382, 0.618, 0.786, and just keep it like that. When you're looking for a target, though, if you're like, let's say you are looking for a price target, then you'll use like 1.23 and then maybe like a 161 for your extension levels, which is basically how people find like, okay, I think price is going to come all the way that far high. And people like to use it too to like determine, okay, the extension level is that if you don't think price is going to pull back here, then you will say price is going to start pulling back when it gets to this this would be considered one. So 1.23 levels when price would be considered. And what you do is you just basically like, sometimes people like to look at the Fibonacci from here and see um, how it behaved at this point. Maybe, so they'll look here and see if price was some way here, and then they would use this as like a reference point, analyze here and say like, okay, it's a lot of action around price came, actually ought to retrace back here. So then you will use this to say, okay, if price came back here this time, then more than likely it's probably gonna come somewhere in between here. So then you'll take that same reference and use the same thing here to come to a conclusion that price will come back to the same levels that price was hitting before in other scenarios. So that's how you kind of also need to combine the Fibonacci levels as well, because the more you get previous history telling you that price is always active around this level, then you know that in the future price is more likely to act around that level as well. So sorry, I forgot to even mention that point at first. So I think that's everything. Hope that helps. Um, I'm gonna try to do the other videos for this week. It's like two more that I was be requested, so I'm gonna try to get those through. All right, great.